Good morning, everyone. Hope everyone is well. Welcome to today's analysis here at Financial Hub. Another day, another week here in the Forex market. As I said earlier on in the week, we are basically coming to the end of the first half of the year, second quarter, which is basically ending, I think, next week. We'll be coming to the end of that and entering into the other half. As we approach the end, we've seen some dollar strength coming into the market. Remember, we covered it on Monday, a few of it. We'll still cover it. On Monday, we saw some dollar strength in the market. So it's something you should pay attention to. And now we are basically seeing what's happening. So basically, it was pumped up also last week by the stories about inflation from the Feds in the US and all those things. Those are the driving factors that affect the markets: inflation, interest rates. Those economic data are what drives the driving force behind the markets. So what we see on the charts are basically a reflection of that, of what we see, of what is happening economically and fundamentally. But anyway, apart from that, we'll go into the technical analysis, look at a few pairs here. I'll do my pairs, then Ken will come in, do his own pairs, and then we'll call it a day. And also this video, as usual, will be posted on YouTube. So that's all I have. Let's get down into the analysis. As usual, any questions, chat room, please feel free. So let me share my screen and we see what we have for today. So let's start off with the dollar index. So what's happening on the dollar index? Last week, when I was covering, when I was long on dollar, I didn't know we'll break a certain crucial level. So pay attention still to the long-term trend. Lower lows, lower highs has been formed. Still that sort of forming. However, we failed to break below this previous low. Okay, so we didn't go to a lower low. We instead got a higher low, and market strongly pushed back up. So with that reaction in the market, it was quick for me to draw sort of this triangular formation. So that's what I'm currently watching. Okay, so this sideways movement, how is market going to react within this region? Because we haven't gone to new highs and we haven't gone to new lows. We're just sideways movement. So last week when market was moving upwards, there was this level I said that was a target, and we strongly broke above it. I didn't know we'll break up above that level, because if you even look close, we'll see it much better on the 4-hour chart. But looking at this pair on the daily chart, this is the daily chart, you can see we had a touch here, strong break to the upside, came, acted as support, moved all the way higher, came down, had that strong break, and then we had a double resistance over here. And after that, we've come and seen again a strong break. So we are back above that level. Okay, so we have to pay a lot of attention to that part. If you go down to the 4-hour chart, so it's this level. You see the level I've highlighted, that's the level I was talking about. We had sort of this wedge formation coming to the downside. After that breakout, I was expecting market to come at least and retest this level before we continue down. But instead, you follow the market tells you. The market gave us a strong breakout of that level. You can see since then, market has been above that level. Basically, this week, we've basically been seeing some retracements coming in the market. There's not been a continuous bullish continuation. Markets have basically been correcting, not so strongly as well. Okay. Yesterday we had some failed Powell testifying, but market didn't really react that much. We didn't see a lot of movement to the downside. So I'm basically watching that level. So on the dollar, I'll be watching if you can get a pullback to this level. So that's the level I'm watching before any significant buys or sales come in. So I'll be watching that level. Strong break, strong breakout, or retest of it can offer a good trade to enter. Okay, so that's what I'm watching. If we continue to the upside, I'll be having a target of this trend line that I've just shown on the daily chart, which is in line with 78.6. okay, if you use the Fibonacci around that level. Okay, but now I want to pay attention to how market will approach this support level, but they'll break back below or retest it quite strongly and continue further up. So what's that now telling me on my other dollar pairs? If I go down to USD card, basically I'm trying to refine this pair, trying to look at it from a different view. Okay, so what I did now, remember, start of the week, what did we have? And basically for the past few weeks, we've been having sort of a line like this, sort of a wedge pattern, which I'm still watching, still respecting. Okay, not that I've done away with it. Okay, so if you draw it like that, you can basically see it was quite a good entry, and that's what I was paying attention to. Remember weekly chart, I covered this a while back. This is the level we've been watching for the past few weeks, okay? Support, and you can see up here we have had that resistance. So here someone saying it's not clear. I hope you can see. Basically on our end we are seeing quite clear. So you can see that support, previous support over here. Market came all the way in the form of a wedge like pattern, got some support again over there. So last week we have to pay attention. This was a strong bullish close, okay? Very, very strong bullish close. What we might see, maybe a continuation. If we are not coming to break back below this level, we can get some deeper correction over here before we get any directional bias. So a better deeper correction can be better. However, now if you draw that trend line in the different way that I was trying to show you now, I was just adjusting levels, just looking. So if you take this upper level, so start with the trend line here, and you come and take this as a turning point, because what is guiding me basically is that line is in parallel if you duplicate it with this lower side, okay? So you can see that. You see that touch over here. So that basically simplifies or rather shows you that there's still more momentum to the downside, because this market hasn't broken any lower lows, lower highs formation. It was just the trend line that was broken. But remember, I keep saying the trend line is not what forms the trend. The formation of higher highs, higher lows, or lower lows, lower highs is what basically forms the trend, not that pattern, not the trend line, okay? The trend line is what just guides us whenever there's a trend forming, to know, to expect where market may turn, may not turn, or may get a retest or a breakout, okay? So that's what I'm watching on this one. However, getting that short position on that wasn't so quick. If you go to the 4-hour chart, you can get to see that there was another trend line, okay? So this was a third trend line bounce that I was getting to see it yesterday, okay? So this is a much less steeper trend line. So if you use this as a touch, this is a 4-hour trend line. So first touch, you can see the second touch. We had a beautiful rally all the way to that third touch, okay? And that's where the short positions came in. I remember last week I tried shorting a bit earlier, but market continued further higher to get at least at this level. That was on Friday after the buy trade that we had. I tried shorting again, then market pushed further higher to come to this level. So this level up here was a much better short position. I tried shorting at the 61.8. However, market short all the way up to the 78.8. Then that short level formation came. So watch this one out. I can still expect this one to continue dropping, okay? This is a very good third trend line bounce. If you go back to the daily chart, it's a good trend line continuation, especially if we continue seeing the dollar weaken, okay? So if you continue seeing the dollar weaken, this can be a good continuation. Look at the long-term trend is still downwards, okay? So pay attention to that. So that I don't waste much time, let's look at USD card, Aussie dollar, I mean. 1 week. So 1 week, what did we have on this one? So long term, this pair has been in a downtrend, long term, since back then here, okay? So you can see that trend line is what I've been talking about lately. Market was sort of pulling back to that level, okay? We came to that level, formed a head and shoulder, which is basically a reversal pattern. So you can see this pattern that came and formed over here. We got that first rejection of the trend, then sort of market tried coming back up, got a second rejection. Now if you go to the daily chart, you can get to see it was this was the first rejection, strong drop, correction over here, then we got this second drop. So basically forming an ABC correction. So what am I watching? I'm watching to see if market can come to this level. This can offer a very good buy level, okay? So I'll be paying a lot of attention to that, okay? So if market can correct to this previous high, now turned support, in line with the 61.8 Fibonacci level, okay, that can offer us a very good support, better seen on the 4-hour chart actually. So you can see I've named it ABC correction within a flag formation. So you can see that ABC. So coming around this level can offer us a very good buy level around the 0.74 level, okay? So that's a level I'll be strongly watching in the next coming days or weeks, depending on how long this pair will take to reach there. That can offer us a good risk reward to take a good buy to the upside from that support level. So back to the daily chart. That is what I'm talking about. So this basically impulse a correction in the form of a flag, okay, ABC, and a good buy around this level. So that's what I'll be watching on the daily chart. I mean, on the Aussie dollar, nothing much. It's basically the same as NZD JPY. Actually, no, NZD USD. So antipodian pairs moving quite in tandem with one another. So you can see this strong support. Okay, that support, same way market is approaching it in the form of a flag formation. Okay, so still respecting the main previous lower high we have is around here. Higher low. So higher low, higher low, higher low, but this market didn't go to form a new high. So basically I'm watching this previous one. So I'll be watching this support. Support, resistance and support. If market can get some pushback to this level, also that one can offer us a very good risk reward for this market to continue to the upside on NZD JPY. On NZD USD. On NZD JPY, what I've just shown you right now, I was just looking at the market. I was looking at this third trendline bounce. So it's quite good to catch trendline bounces, especially if they're in a channel formation, because they can offer you a good target as well. So you can see that first touch over here, second touch, third touch. Okay, so a very good trendline bounce, and this market can offer you a good risk reward for it to continue further up, at least targeting those higher levels. Last week we had that crazy drop that we saw. So last week market was sort of in this formation. You can see that drop, market came all the way to that level, and you can see this quick reversal that market is giving us. Okay, so a quick drop to the downside, a quick push back to the upside. Okay, so that's on NZD JPY. But if you paid attention to the daily chart, it was a good guide. That was a beautiful third trend line bounce on that one. So anyway, so that's what I have on my pairs, the ones I'm watching. I'll leave the floor to Ken, and he'll do the rest of the pairs that he has. But that's what I was watching. Quite a good setups, and yeah. So that's it from me. I'll see you on Friday.
So hi guys, hope you're doing well. Hope you're having a wonderful time. We're trading markets. We're looking at different setups, like Caleb said. So on my watch list, on my radar, I have a couple of setups that I'm currently in. I'm also watching a couple of setups to shape up. Inflation, the Fed's tightening. We've seen some big moves in the market, but I think for me those are temporary moves. From the Fed stance, I don't think there's any major change yet. There is a change in the dot plot, yes, but I don't think there's a confirmation yet for the market. I think the reaction you had last week was just a minor correction, more of a temporary correction before markets recover. But well, I have to rely on the price action to confirm my hypothesis, so I won't trade just my opinion. I'll wait for the markets to kind of confirm what I really think will be happening, and then probably I can know how to position myself. So I'm not trying to forecast where markets are going. I'm trying to have an opinion and then rely on markets to tell if I'm right or wrong. And if I'm right, probably put some risk in the market. If I'm wrong, avoid the markets. If I'm right, put some risk. If I'm wrong on the timing, pick up a loser and wait for the next trade. That's how trading works, at least from my end. That's how I understand it. Anyway, I have Nasdaq shorts currently. I'm looking at the Dow. I'm looking at gold. I think there's a potential long on gold. I'm still trying to find a good entry though. There's no entry for me now. Some setups that I shared on Monday, all of them worked pretty well. GBP USD, my target was attained. Euro USD, my target has been attained today. Euro Yen, target attained. The Dow, target attained. Oil still moving higher like I pointed out. So market's really behaving like I personally expected. I've made some money out of it. So I had some positions at least beginning of the week. I never wanted to execute all positions due to correlation risks. So if you do research on risk, you'll understand correlation risks, which most people don't pay attention to. For me, I do personally pay attention to that. So I avoided executing some setups because of that. But anyway, I'll just go down straight to the chart breakdowns. I'll look at some of the markets that I have, some of the patterns that I'm watching. Then probably on Friday again, we'll do a review and see what happened in the markets. Let's start with gold. Yep, so hopefully you can all see my screen. Anyway, starting off from the daily chart. I want to go to the weekly chart. I think I covered that on Monday. If you didn't get that, unfortunately, we're sorry. But anyway, looking at gold from a daily chart perspective. Gold, I recently switched to this trend line and I realized that this was a third trend line bounce. And now this becomes a bit tricky for me, at least on my end, or how I look at markets. From a fundamental perspective, I think it's very, very right to be long on gold. I don't see any fundamentals which would make gold start sinking lower, at least at the moment. But if there's a change in the dot plot, then there's a correction in gold prices. And you can see clearly what happened last week. We had a move lower from 1900 and now we're trading at the 1781 level. So what do I expect will happen in this market, or rather what am I watching for me to start acting or positioning myself in this market? Looking at it from a daily chart perspective, I was expecting a collapse to 1725, or rather a bounce of this descending trend line. So first bounce, ascending trend line, second bounce. I was looking for a third bounce at this level. So that's about 1725, 1735 level. But you can see clearly markets never go to that level. So instead we got a bounce at the 1760 level and we have been consolidating in that zone. So if I just go down to the 4-hour chart, let me just go down to the 4-hour chart. Okay, that's the 4-hour chart. You can see clearly from Monday, nothing much has been happening on gold. It's just some sideways movement. So what am I watching? There are two probable scenarios, at least on my end. One, we could see a move back to retest this 1750 before a very, very strong rebound higher. Or two, we could see a strong rebound higher. But for me to take part in that move, I'd want a break above 1800 and at least some solid price action to shape up for me to take part in that move. For now, I'm out of this market. I'm just watching it very, very keenly to see the patterns that will develop. On the hourly chart, these are the patterns. You can see clearly sideways movement. It's in no man's land, at least from my analysis style. So I think if we came back here, I think this would be a perfect entry for me. If we visited 1750 and I saw some bullish momentum, this would be one hell of a very good trade. But at least for now, until we cross the 1800 mark, I won't be taking part in this market. I'll just be out watching what will be happening for me to make a decision on this market. So that's what I have. Initially, when I started trading, I'd take such trades. Probably I'd risk some money here. I'd put an entry here, I'd target 1800 and a stop loss below 1775, which makes sense. But over time, I've learned that some of these trades are suboptimal trades, and they're the ones which interfere with your overall profitability in the markets. So rather than risking money on some of these trades, you'd rather wait for a very, very high probable trade which you've analyzed well. You think there's a high chance that the market will point into one direction, and then you can execute that trade. But once you start risking money on such trades, there's a high chance in the long run you won't be able to make money despite winning some of these trades, because in the long run you'll have very many bad trades which were executed and never made sense, at least from a analysis viewpoint. Looking at GBP USD, I think on Monday I talked about this move higher, at least 1.4 to retest this trend line. Clearly you can see we are now approaching the 1.4 level. We're currently trading at 1.3980 level. Now I'm keen on two things. If we get a break of 1.4, a break of this trend line, I think this was just a temporary correction and bulls are back in control, and I'll be looking for very, very good long entries higher, looking for a move to 1.45, which is the next target. But if we get a rejection of 1.4, a bounce off this line, and a good follow-up of bearish momentum, then probably we could see some bearish momentum continue in the market and you could see some strong move to the downside. Looking at it from a daily perspective, a crucial trend line was broken last week. You can see clearly we had the first bounce, second bounce, third bounce. This is a very, very strong trend line. It was taken out last week, and see what markets went really lower. So if we can retest this line and I get a good signal and I start seeing some bearish momentum, probably I'll take some risk looking for the 1.3650 level before looking for other long positions. So for now, we're in no man's land again, even for this one. We are approaching 1.4. I think the trade has already been taken for those who took a long trade For those who never took that trade, I think it's too late, at least from my end, for you to be taking a position right now looking for 1.4, 1.4250. There is no significant entry for you to take part in for this market. Next, I look at Euro Yen. Same hypothesis on GBP USD. I don't think anything has changed. On this one, you had a very, very good trend line bounce, and I think this is what makes it very difficult again to tell where this market will go. In some of these markets, we have gotten a break of trend lines. In some of these markets, we've gotten very good bounces, like Caleb shared on New Zealand Japanese yen. I'll show you on Euro USD. You can see clearly Euro Yen. So this looks more like a temporary correction, and then markets move back and continue the trend, which happens a couple of times. We've been trading, can see clearly this was a correction, this was a correction, this was also a correction. No, this was a correction, this was a correction. I think 115 was the lowest point for this bear market, and you can also see this correction. So this could also just be a normal correction and markets go back. And again, if you wait for too long for you to confirm this is a correction, probably the move will be over. So you really need to think hard about how to trade markets and how to position yourself. And one of the ways is to look for setups that you'll be trading. So for me, this is a good setup. I think my long bias will be invalidated once you start trading below the 130.5 level. As long as markets are above 130.5, at least from the daily chart perspective, I'm still very, very bullish on Euro Yen. In the 4-hour chart, I'm trying to find an entry. I'm still trying. I got to an entry last week. Not last week, on Monday, like I said. So this was the trade. You can see now we are still moving higher to 132.5. Probably will visit 133, 133.5. But I'm looking for an entry now after the correction down. After this move, I expect some minor correction and then a continuation. That's why I look to come into the market. That's why I'll be looking to put some risk in the market, looking for higher highs or something of this sort. So for now, I'm out of the market, made some money out of this, but I'm currently out of the market. I'm focused on other setups. So this was my outlook on Euro Yen. I think I've shared the long-term perspective, which is more important. The short-term perspective, no setup, still in no man's land, and you have to stay out of the markets when that's the case. Dow Jones. I also made some money out of this on Monday. I don't know why in my head it's last week, but on Monday. Now on the Dow, I was looking for a move lower. I won't lie, I'm still looking for a move lower to 31,250. Why? From a weekly perspective, I'm looking for a retest of a major level, which is this 31,250. I'm still looking for this third trend line bounce. So you can see the first bounce, second bounce. I'm looking for this strong bounce on this line before the continuation to the upside. But this depends on how markets will shape up. So on the 4-hour chart, this is the price action. We're currently trading at 34,000, a major level. Be keen on price action at 34,000. If we break 34,000, we could see 34,500, 34,250 coming in as the first target. But for now, again, just like I said, no setup, at least on my end. So I'm still watching. I was watching this third trend line bounce. If we got this third trend line bounce, which was at 34,250, 34,200, probably. And then, besides getting a third trend line bounce, I'd also want to see some bearish momentum coming in and some follow through to the downside. I'd sort of look for an entry, but at least for now, no entry on this one. Also, I'm just out of the market, so I'm watching what will be happening. So where I have some risk, where do I have some risk? Oil moving higher, $75 a barrel is the target. I think that's where you should be looking for shots. That's a psychological level. We could see a steep collapse on oil from the $75 a barrel. Why? On the daily chart, I think this will mark the end of this move that I've been talking about. So we have the first bounce, second bounce, third bounce. And if I just use my Fibonacci to measure, I think this will be the 61.8 extension. So looking at it from that perspective, you can see 27.2, 61.8 comes at 75. From my backtesting, there's an 80% chance that markets will turn once they get to 61.8 fib retracement. That's an extended move, and you can see clearly there's no major correction in this market. So what I expect is after this move, we could see such a correction. Such a correction could be coming on oil, or you could see some sideways movement. How to time it is now the key thing. I think that's the most important thing for any trader right now. I also think this is not a setup for this month, probably next month, because this is the end of this month, this week. I think we'll mark the end of this month. So we'll see how markets shape up, at least for next week. But for now, no setup again. So there was this very beautiful entry at 70.5. You can see clearly this was another good opportunity at 71.5 to scale in You can see markets are now trading at 73.5. I think there's a high chance 75 will be hit. So I'd still be riding this trade. I'd still be holding it if I was in this market. But unfortunately, when this setup came around, I had some risk on other places, and I don't often change my idea just because I've seen some other setup, some other shiny objects in the market. Euro. Looking at euro from a daily perspective, I think this one clearly tells me where the dollar is going. That's why I even brought it back. Initially, I never used to look at the euro, but now I've brought it back because I've realized the dollar is at least 70% correlated to euro, unlike GBP USD, which is what I traded before. Looking at euro, you can see clearly a clean third bounce of the trend line. So first bounce, second bounce, third bounce. What we need now is a confirmation that we'll get enough momentum to follow through in this market, which could lead us to the 1.25 1.2750 level, which is the next upside target. But I think 1.25 is a conservative target, a target which can be attained very, very soon. Probably in the next 2 or 3 months, you could see the euro trade as high as 1.25 before the end of this third quarter that is coming. On the 4-hour chart, there was also a beautiful setup that I talked about. You can see clearly I've gotten to my target, but I think it's right for you to be as ambitious as bringing this target at the 1.2150 level. That will change your risk reward from about 1:3 to about 1:7. But sometimes you gotta hold some positions, you gotta take some risk. And once markets are working in your favor, why not hold? I'm sure some of you have held on to losses and you've waited for losses to come back, hoping that they'll come back. Instead, I'm trying to reverse your thinking, and I'm telling you, hope that this win will get to this level. If you're in that position, if you're not in that position, try and find some entry if we can get a break and a retest of 1.195 level. But be keen on 1.2. I think we could get a move to 1.2, a retest of 1.1950, and then an extension to 1.2150, which is the next upside target. So that's my outlook on Euro USD. Nasdaq is in its own world, sort of trading in a very, very funny way, unlike other indexes. So if I just look at the Nasdaq, from a daily perspective, we're still in a bull market. I remember the last time I watched this correction, I was looking for this bull move, clearly coming in very, very nicely. And you can see from the fib extension, I'm expecting a move to 14,750, around 15,000 if you're going for the psychological level in this market. If I go down to the 4-hour chart, you can see we've gotten a third trend line bounce. So first bounce, second bounce, third trend line bounce. You had an opportunity to scale in or come back in if you're not in this market. Now we're trading higher, so it's just a matter of time before we get to 14,404. However, we could be seeing a correction to the 14,180 level, and on the lower time frames, the 15-minute chart, I've taken that correction. I'm looking for that move back to 14,220. This is a pattern that I normally trade most times. So once markets breach the R2 level and I see some sort of movement to the downside, I am very keen to execute a short position, looking for a move back to around 14,180, which is this level. I think there's a high chance markets will visit that level before continuation to 14,500. Lastly, I look at GBP JPY. Someone has requested me to look at it, but I will warn you that I have not been looking at it for a long time, so I don't have a lot on it, but I'll try and bring in my GU perspective in this one to try and see if we can form something solid. Anyway, looking at it, this was a move that was well expected. I think the move from this extended move, a correction to 154 was quite expected, but not to 152, if at least from my way of analyzing markets. I don't like saying something is unexpected because there are people who expected this move and that's why it happened actually. So looking at it from that perspective, you can see clearly I've gotten a good rebound higher, and if I just use the Fibonacci level to plot, you can see we've bounced off 61.8. Probably we could be visiting 158 very, very soon, but we will want prices to remain above some significant levels like the 155 level. On the 4-hour chart, let's go back down to the 4-hour chart. You can see the quick recovery. I was actually showing Caleb this recovery. You can see the steep sell-off, and then within just 3-4 days, we are back where we started. In your trading career, you'll see such things very many times. And in fact, when markets are really, really out of shape, that's when you should be very, very keen on trading. That's when you should be taking risk. Be keen on that trend line, I think. If we get a bounce of this trend line and then you get some momentum back below R1, I don't want to be out of that market. But if you get a break and a move higher I don't want to take part. But there's also a chance that we'll get a correction first, then a move and a breakout to the upside. So there's a lot that can happen here, but for me, at least for now, I don't think there's any setup that I can see to be executed in this market. So I think I'll stop there. I've covered very many markets. In case there's any question, I'll answer. If there's no question, I will wish you the best, and I will hope that the peeps will be following you like they follow us at Financial Hub. So see you guys. Someone said nice session. Thank you. That's why we keep on doing them. We hope it was helpful to all of you guys. So we'll see you some other time. Wait for the podcast on Friday. It's all about cryptos. You want to understand why we have had the recent collapse in cryptos? Tune in on Friday. We'll be talking about cryptos. So see you guys. Peace.